Hello, everyone, and welcome to the October edition of the WBA Compliance Corner. As within the past editions, we will take a quick look at some hot topics that have come up this time over the month of October. And as always, we have additional links accompanying the information on the slides. So if you want to take a deeper dive or have a reference or take a look at some additional items for reference purposes, those items that will be included are marked with an asterisk on each slide. And you can find the link, the corresponding link in the heading within the description below this video. So with that, let's get started. And first, just a quick summary of what we'll be looking at. So first, we have some threshold adjustments. We have inflation adjustments to thresholds for HMPL, Reg Z, and Regulation M. We have an OCC Bulletin on managing credit risk associated with refinancing. And we also have OCC Supervisory Operating Plan that will be in place for 2025. Then we have a couple FDIC items, including an extension of the compliance date for FDIC's recent revisions to Part 328, as well as an extension of the comment period on their proposal to amend brokered deposit rules. Lastly, we'll wrap up with CFPB and some releases, including their fall 2024 supervisory highlights. And we have the finalization of their consumer data rule, which is required by Section 1033. So first, let's take a look at the inflation adjustments that we had come down this month. We have the HMPL rules. Those rules, of course, requiring appraisals for HMPLs, exempting certain transactions from those requirements beneath a certain dollar amount threshold. And so this amount is, of course, adjusted annually. And the exemption threshold for when appraisals will be required for higher price mortgage loans for 2025 will increase from $32,400 to mortgages of $33,500 or less. Similarly, for coverage under Regulation Z, an exemption threshold for exempt consumer credit transactions will be increased from $69,500 to $71,900 for 2025. And the threshold for exempt consumer leases subject to Reg M will track with that, and also go from $69,500 to, again, $71,900 in 2025. All of these thresholds will be effective as of January 1st of 2025. So all three of those, meaning the HMPL, Reg Z, and Reg M, and a link to the release from the agencies for each of those can be found in the description right below this video as well for reference. And as an additional reference, as we've done in the past, we'll include a full list of the threshold adjustments as they come down from the agencies in a future compliance journal. So keep an eye out for that. They have an additional reference, have them all for ease of access just in one place for you. Just a couple things on slide 4 here regarding OCC releases. First, OCC issued a bulletin, which includes guidance for managing credit risk associated here with consumer refinance transactions. The guidance here that OCC has provided has risk management considerations. It's broken it down into the transaction and portfolio level. So considering the type of loans that you have and potential risk factors, take a look at this guide. It's not too long, but it does have some good highlights for risk management and risk rating considerations. So when you're taking a look at a loan for approving or structuring a loan or just a general review, ongoing monitoring, or maybe you have some loans that are nearing maturity and you're deciding whether to grant an extension or a renewal, the guidance can help identify some factors that might be important to consider. Also just from an overall policy, right, and a portfolio review perspective. It also highlights some effective processes and just overall how to mitigate some refinance risk. Then, just really quick, OCC also has released its Bank Supervision Operating Plan for 2025, and this includes OCC's supervision priorities and objectives for the coming year. It also guides how OCC will implement those supervisory strategies. So staff will be using this plan and outlining their priorities, their planning, and resource allocation in the coming year. Some highlights within this, just to pull out, are items of notice, right? And what OCC will be focusing on: cybersecurity, third-party risk, BSA, CRA, fair lending, right? So not too many surprises in there. But again, for reference, that's included in the link within the description below this video. With that, I will turn it over to Heather.
Super, thank you, Scott. And as Scott mentioned in the introductory remarks to our video, we have some items from FDIC to highlight for you as a hot topic. Both of these are extension dates. So the first item that we wanted to make sure that you were aware of is that the mandatory compliance date for having your disclosures in place regarding member FDIC, both in your lobbies and in your advertisements and on your deposit taking systems, that mandatory compliance date has been extended. What would have been January 1 of 2025 out to May 1 of 2025. It's important to note that this extension is only for Subpart A of that rule. And again, that is the section of the rule that is the requirements of financial institutions putting member FDIC in the lobby locations appropriately and in advertisements and on your websites or mobile devices. It does not extend the compliance dates for otherwise complying with the rules to make sure that there is no misrepresentation of the usage of FDIC by non-FDIC regulated, non-FDIC insured financial institutions, I should say. So it's only extended for Subpart A, which is an important component because that's what we're all trying to implement right now. FDIC certainly heard from banks that in working with third-party vendors, it's difficult to make that end-of-year compliance time period. And so an extension has been put forth. So continue to work with your third-party vendors in order to meet that time period. We still have a couple outstanding questions for FDIC on their revised rule, which we are hoping that they will answer for us yet in their FAQs or through their final webinar that needs to be had yet between now and implementation. So stay tuned on that. Also, for those of you that will be participating in next week's WBA Compliance Forum, the regulators will be there and FDIC may well share some more information at that point as well. Also, as Scott mentioned at the get-go of the video, there has been extension of the comment period for FDIC's proposal regarding brokered deposits. FDIC has proposed to make some changes to that area of their law, actually looking to roll it back to what the standard had been prior to the final rule that we're working with right now, which was put in place in 2020. And that old rule has some oddities in there that would make offering brokered deposits a little bit more difficult than what we currently are working with underneath the current rule. So it will be important for you or for your colleague at the bank that deals with brokered deposits to really take a look at the proposal and see what the impact will be on your financial institution. Some believe that brokered deposits are more risky to financial institutions, and any stories that you have to share with FDIC of how you are hedging against those risks and how those risks are not applicable to your financial institution. Information such as that will be helpful, and comments back to the FDIC to keep the rule at least what we're dealing with today and without that rollback. The comment period now has been extended until November 21st, and it's our intention to have a draft comment letter to be used by our membership as a shell that then you could put in your bank-specific examples and impacts by the proposal. So stay tuned as we work towards that new compliance comment period date of the 21st for a model to work with. So then we also wanted to make sure that you were aware of a couple things that the Bureau had released. And I'm sure you've seen through all of your different compliance threads these last couple of 10 days or so that the Bureau has released their final 1033 rule. It's referred to as 1033 because it is that section within the Dodd-Frank Act that you found this particular statutory provision. And so we have here the applicability statement for you that it applies to data providers that control or possess covered data concerning financial products and services that the consumer has obtained through a data provider. All of those words that are underlined are all defined terms within the rule. Data provider is basically going to mean any bank or any card issuer. And the threshold for this particular rule starts at banks that are over 850 million in assets. So if you are a financial institution that has 850 million or less in assets, this rule will not apply to you. For those of you who are over that 850 million in assets threshold, then you can expect that a consumer or a third party can reach out to you and be asking for covered data and to have that sent to the third party or consumer electronically. When you're looking at covered data, you're looking at transaction information or account product information, contact information. There's a lot of nitty-gritty information that is about a consumer account or a credit account that the consumer will have the opportunity to ask for underneath this rule. When looking at the accounts in question, you're looking at account, as that term is defined by Reg E, which you're looking at checking account, savings account, for example, and also credit account underneath, credit card account underneath Reg Z. In addition to having the opportunity for third parties to ask for certain data and for that data to be shared electronically back to the requester, the bank will have to set forth the new policy and procedures, and there are set record retention requirements for this rule. Implementation is quite quick for those of the larger institutions that need to comply right away by 2026, which quite frankly is right around the corner. For most of our membership that will be applying by this rule, you're looking at 2030 for implementation time period. We have included for you in your materials or in the links to this video, I should say, the actual rule. There is also an executive summary for the rule if you're wanting to take just a quick high-level review of what the rule is, as well as a link to a filing, as there's already been litigation on this particular rule. Very shortly after the rule was issued, the Bank Policy Institute and the Kentucky Bankers Association filed a lawsuit against the Bureau challenging the Section 1033 rule, basically saying that the agency has overstepped their authority when they've promulgated the rule, primarily because it puts customer data at risk. As you can imagine, just from talking from a very high level of what this rule is, there's concerns about data breach. There's concerns about third parties misusing this information. There's also no oversight right now underneath over those third parties asking for data. So there's some significant concerns related to this rule. So we'll see how that litigation goes forward. Not to mention the implementation time period for this is quite unreasonable if we're needing to deal with a 2026 implementation date. So some interesting reading for you included with this video. And then lastly, we wanted to make sure that you were aware of the most recent release publication by the Bureau of their supervisory highlights. And it's always good to read what they're finding in examinations because it does tend to have a trickle-down effect. And interestingly, they're focused on automobile finance and interesting about the add-on products and the repossession activities that they've highlighted in their exam findings. So wanted to make sure that you're taking a close read at that to see what might be coming down the pike again from FDIC or the Fed. So with that, that's a quick summary of the highlights that have been issued by the agencies in the last month. As Scott mentioned, we tried to provide this to you so that you know what's been issued and how to incorporate those issuances into your day-to-day or make sure that the personnel back at your office are aware of what's come down and from a planning perspective and a training perspective. We also have a number of different resources that we always like to highlight at the end of each of our videos about our compliance tools, about our publications each month, about training that is an opportunity for you, and certainly about our compliance call hotline where we're always happy to talk through a question or try to help you find where the rule might be, whether it be on the state side or on the federal side. We also recommend that if you have a desire to give back to your industry, please consider being a volunteer. WBA has a number of different committees and sections that are always looking for volunteers. You can find that information out on our website, as well as to be an advocate for the banking industry. No one knows what you have to deal with every single day more than yourself as a banker. And so providing your insights to persons on the state and federal level as an advocate is truly an important component, and we welcome you to that opportunity as well through our advocacy efforts. So with that, we're going to wrap it up. Happy Halloween to everyone, and we look forward to seeing you guys in November.